Welcome to the WTR Healthcare Happenings podcast. I'm your host, Tim Gerdeman, Vice Chair and Co-founder and Chief Marketing Officer of Water Tower Research. In today's special Flashcast podcast episode, I'm being joined by my healthcare equity research colleague, Robert Sassoon, to discuss his initiation of coverage report on Vivos Therapeutics. The title is Reimagining Sleep with a Reimagined Strategy. Vivos trades on the NASDAQ under ticker symbol VVOS. Good morning, Robert, and thanks for joining.
Good morning, Tim. Great to be here.
Robert, can you first describe what Vivos does and the primary market it's serving?
Yeah, sure. So Vivos is a revenue stage medical technology company addressing breathing and sleep orders caused by dentofacial abnormalities and primarily targeting obstructive sleep apnea or OSA, which is often labeled the silent killer. Uh, Vivos's technology platform centers on something called complete airway repositioning and expansion, or CARE oral appliances. Its appliances are the first and only FDA-cleared oral devices for treating severe OSA in adults and children aged between 6 and 17. Now, they have a big differentiating factor in that, unlike CPAPs, which is the current standard of care, or other traditional oral appliances, Vivos's devices aim for permanent anatomical correction rather than lifelong symptom management. So that makes Vivos's suite of products pretty innovative and uniquely condition modifying. Now, if you look at the market, the US OSA market is pretty large. It's estimated at $10 billion plus, but yet it's very underpenetrated. Now, according to the studies that I've seen, including one from Eli Lilly, OSA affects more than 80 million adults in the United States and around 10 million children. But a staggering stat to mention is that 80% of the adults that have OSA remain untreated. So you might ask, why is that? Well, the reasons are possibly a number, including it's a gradual onset condition. It is an overlap. It has overlapping symptoms with other conditions. It's low awareness, stigma, and also fear of CPAP therapy, which is perceived as uncomfortable and difficult to maintain. And going back to the comorbidities, strong links do exist between OSA and obesity, diabetes, and cardiovascular disease, and also a number of neurodegenerative diseases. So that further underscores the unmet need here. And I'll just throw one more stat out there. A CDC analysis found that from 1999 to 2020, which is obviously the time of the onset of the COVID pandemic, 231,000 deaths were associated with the OSA alongside with other conditions.
That's a pretty shocking number
Yeah.
in terms of on the upside. So, Robert, the main theme of your report is the company's transformative business model shift. Can you please elaborate and explain how this shift is being executed?
Yeah, sure. So Vivos is transitioning from a low-margin dentist-focused distribution model to a vertically integrated patient-centric healthcare service platform. So the old model was based around enrolling dentists in the Vivos Integrated Practice or VIP program. And under that model, the dentists retained most of the treatment value, effectively limiting Vivos to being a wholesaler of its oral appliances. In contrast, the new model emphasizes direct patient engagement through owned or managed sleep centers and specialized sleep optimization or SO teams. So the acquisition of the Sleep Center of Nevada back in June of 2025 effectively marked the first major execution in this business model pivot, which aims to capture full economics, scale efficiently, and eliminate the value leakage that characterized the legacy model.
So I'm assuming there has to be a significant incremental EBIT margin benefit to them by this new model. Can you elaborate on the legacy and new business model differential?
So, so Vivos's pivot represents a fundamental shift, as I said, from a low margin, high leakage B2B dental training and distribution model to a vertically integrated patient-centric healthcare services platform. So the rationale is clear. Capture a much larger share of the end user economics, create a scalable growth engine. Under the legacy dental model, dentists retained as much as 90% of the treatment value. So that left Vivos with with the minimal margins and together with high customer acquisition costs, ultimately resulted in a highly unprofitable structure. So the new model basically focuses on direct patient engagement, And that approach unlocks multiple revenue streams from diagnostics and treatment. And the early data suggests that each SO team could generate more than $500,000 per month, with contribution margins exceeding 50%, creating a far more lucrative and sustainable platform. That said, achieving full optimization will take time. Management estimates that 5 to 6 months for six SO teams to reach peak revenue generating capacity. But still, we've seen that the impact already of this pivot is already visible. Vivos delivered a 76% year-on-year revenue surge in the third quarter, recently reported third quarter results, climbing from around 4 million to approaching $7 million, driven entirely by the first full quarter contribution from SEN and the business model pivot.
Great. What's your sense for the market opportunity and size for Vivos?
Potentially immense. As I mentioned earlier, OSA is a large yet very underpenetrated market. The market opportunity for Vivos is therefore potentially quite large if it can execute its new strategy effectively. So I do believe that Vivos is competitively advantaged on several counts. Number one, CPAPs, which account for around 75 to 80% of the OSA treatment market, at least at first dibs, are generally popular with major adherence limitations. Second, Vivos supplies the only appliances with severe adult and pediatric OSA FDA clearances. And thirdly, Vivos care appliances have potential for permanent anatomical correction versus lifetime therapy using CPAPs and other sort of treatments like traditional oral appliances, surgical options, and pharmacological options such as GLP-1s, which have recently been cleared for this treatment of OSA in the market by the FDA. So that all results in significantly lower lifetime treatment costs for Vivos's care products in comparison.
Perhaps for a moment here, Robert, you can walk our listeners through how you see Vivos's growth strategy and pathway to profitability.
Yeah, so Vivos's growth strategy is anchored in scaling its SO teams within the Sleep Center of Nevada, while actively pursuing at the same time additional acquisitions and partnerships here there are in more than 2,500 accredited sleep centers across the US. And in fact, even as the SEN integration continues, Vivos has already begun expanding its network beyond SEN. For example, in July, the company signed an affiliate agreement with a Michigan-based sleep specialist, and that was expected to start seeing patients around now in early December. So management has also disclosed that it is engaged in ongoing negotiations with several other acquisition and affiliation prospects in the key markets. Now, from a financial perspective, Vivos is in a transitional phase. So while the company is processing less than 40% of the 3,000 or so new patients tested monthly at SEN, the early impact of the pivot is clear. Third quarter revenue surged 76% year on year, as I mentioned. On the flip side, expenses have risen sharply due to integration costs and upfront investments in diagnostic and treatment infrastructure. So these are necessary steps to support future growth, and at some point in the coming quarters should normalize. So looking ahead, I see a credible pathway to profitability. Our model projects Vivos could achieve cash and operating break-even by 2027, assuming successful SO team scaling. And we're sort of penning in revenues exceeding $50 million by 2027. So importantly, I would note that these estimates do not factor in additional network expansion, and that remains a core pillar of Vivos's growth strategy. And that, if that happens, that could accelerate the timeline to break even.
Okay. Sounds like a really interesting story is unfolding there with a lot of growth in the future. Before we wrap up, Robert, can you give us your thoughts on how investors have reacted so far to the developments?
Yeah, it is an exciting growth story that is unfolding, but investor response has so far been relatively muted, which I think is understandable given that execution remains the critical factor in any strategic pivot. And fair to say, we're still in the early stages of the transformation. That said, if Vivos can build on its strong third quarter performance and demonstrate sustained revenue growth, along with a clear pathway to positive cash flow and profitability in the coming quarters, I would expect investor interest to gain traction. The upside potential is quite compelling, especially considering that Vivos currently trades at a substantial discount to its publicly traded peers in the OSA treatment space on forward revenue multiples. Just to let listeners know, we will be hosting a fireside chat with Vivos's senior management on December the 16th, starting at 11 a.m. Eastern. So keep an eye out for registration details in the coming days.
Great. Looking forward to that fireside chat. And thanks so much for your time today, Robert Sassoon.
Thank you.
Thank you for listening, and don't forget to subscribe, as well as visiting www.watertowerresearch.com to stay up to speed on the company's small cap written research reports, podcasts, fireside chats, industry-specific symposiums, and conference schedules. We will see you next time for another edition of the WTR Healthcare Happenings podcast. Finally, a special thanks to the producer and editor of the podcast, Krista Fitzpatrick.